How are you guys doing? This is Ryan. Welcome back to the channel. Today we're going to do my Robinhood portfolio update because I haven't done one in a while and the account just passed $30,000, which is pretty cool. And if you guys have been following the channel for a little bit, you know that this is one of my 3 portfolios. My other portfolios are just mainly indexed and ETF based investing, and in my Robinhood portfolio I focus more on individual stock and cryptocurrency purchasing, and that's really the real reason why I use Robinhood. Some people have said, why are you using Robinhood? They're not a good brokerage, blah, 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 blah. Well, they offer cryptocurrency and I like to invest in it, primarily because this account is all about beating the S&P 500, and I've been building it for the last 6 months, and my return so far is 45%, which is pretty amazing, and a lot of that has to do with the returns from cryptocurrency, and also, of course, Tesla has been on an absolute tear, and yes, I did take some profits on it. Kind of not sure how I feel about it overall, but I've always felt like when a stock goes parabolic, it's wise to sell some and take some profit. This video is being recorded after the market is closed on January 31st, and we're gonna run through it real quick. The portfolio has nearly doubled since the last time I've done this, so I thought it'd be really cool to update it on the channel. And guys, if you like stock market investing, financial freedom, and just really want to follow along in all the crazy investments I do, please make sure to subscribe to the channel, turn on the notification bell so YouTube notifies you every time I upload a video, and please just gently tapping that thumbs up button greatly helps the channel out. It allows this video to reach a broader audience. So with that said, let's jump into it. Okay, so my current position in the portfolio is $30,248.57. And as I mentioned, I am up 45% since I started this portfolio somewhere around here in June, July, which is pretty awesome, which gets me really encouraged to grow this portfolio further, and not just my passive investing, which I do in my other 2 portfolios, my retirement funds. So this is gonna be a quick run through. We'll look at the stocks. What am I buying? What am I adding to? What have I added since my last update? What are my returns? Let's jump into it. All right, so the first stock we'll talk about here is Facebook. I actually bought a share today because it's down about $20 from its high. And I just think Facebook is an amazing company, and I want to add over the course of the year. So will we see better prices? Probably, and I'll buy at those prices too, but that's not guaranteed. So I currently own 7 shares at $184.49, total equity of $1,409, and a total return of 9% so far. I use Facebook's products every day, and a lot of times when I'm a consumer of a product, I also want to become an owner. The next company is one of my favorite companies, and that is Johnson & Johnson. I recently picked up one more share of Johnson & Johnson because I just think they deserve a bigger spot in the portfolio, and I'll probably buy more of them this year as well. I own 8 shares at a dollar cost average of $131.49, with a total equity of $1,189 and a 13% return. Dividend King, and if you really want to learn more about Johnson & Johnson, why they're such an amazing company, go over to my boy GenExDividendInvestor's channel. He made an insane video, a deep analysis like he always does. It's his 3rd largest holding. This run through is not to do a deep analysis in the companies, but if you want to learn more, that would definitely be worth your time. The next company I bought around last earnings is Twitter. I'm a big fan of their CEO, Jack Dorsey, who is also the CEO of Square, which we'll talk about later. The stock took a plunge after last earnings, and I ended up buying 20 shares at $29.26, and I made a return of 10.73% with a total equity of $648. I try to be really opportunistic with bad news. It was just a minor marketing issue that the company was having at the time, an easy fix. And I've been buying stocks the last couple of days with the coronavirus. I'm long-term bullish on the market, so anywhere we can get an opportunity to buy stocks at a lower price, I want to take advantage of it. The next stock is the big dog, and that is Tesla, which has provided so much return for the portfolio, and I trimmed the position. I sold 10 shares at $491, which is kind of painful to say, but I live by the thesis, if something goes parabolic, you have to sell. That's just my investing philosophy. I'm okay with not buying the bottom of the market and finding the top. But if something goes parabolic, I find it wise to take some profits. And this money in Tesla right now is gonna be there forever. So I currently own 8 shares I bought at $239.90. I have a total return of 179% and 67 cents, which is crazy, with a total equity of $5,166. If Tesla does end up coming back to earth, I like to add a couple more shares. But for now, I'm just gonna hang out and wait for the euphoria to end. If it doesn't, that's then great. I own shares, I get a piece of the upside. Looking back on it, I wish I sold in 25% chunks. I think I sold too much at once, but hey, we're always learning. The next stock I own, I bought a share of this past week, is Alibaba. I currently own 2 shares at a total equity of $412 with a dollar cost average of $177.95. Again, not deep analysis, but the coronavirus is definitely creating an opportunity for what I think is one of the greatest companies in the world, Alibaba. AbbVie is also on the decline. I bought 1 share of them this past week. You have to love commission-free trading. I can buy one of this, one of that. It's amazing. So I currently own 14 shares at a dollar cost average of $68.88, a total return of 18.29%. They're an awesome dividend company. I have a dividend coming up this month. They'll shoot me the extra 15 bucks just for holding their stock. I'd love to see this portfolio grow more dividends, and that's kind of my goal, and that's why I was okay with selling some of my Tesla stock. And you'll see some other stocks I've been adding since, because I want this thing to start self-funding itself. And I believe once I can get this up to 50,000, 70,000, 100,000, I could just reinvest my dividends, and that'll be the money in the account, and I could focus my capital now to do other investments. So speaking of dividends, we'll talk about the dividend king that is on a dip right now, and that is 3M. I currently own 11 shares, and I am down in the position, and I'm perfectly okay with that because I wanted to go down further to buy more, but I own 11 shares at $161.10. I am down 1.43%, and you know, earnings beat expectations by a little bit, so I'm not sure why the stock is down so much, but they did lay off some employees. They're looking to streamline their business plan a little bit. I guess the market didn't like that, but I think the market is getting 3M wrong right now, so I'll be adding more to 3M as well. And sorry if my hair is crazy. I have a newborn baby, and I've been trying to get to the barber all week. It's been very difficult, so bear with me. This isn't a beauty channel. If you want a beauty channel, check out my wife's channel. So the next stock I own is Waste Management. I own 11 shares at $114.33. I'm up 6.39%. Very defensive position in the portfolio. If it goes down, definitely a position I love to add in the future. You know, in investing, I always look around at the world and like, what is being used a lot? In my neighborhood, there's a lot of new construction. There's waste management cans everywhere. And at my office, we use them to pick up our trash. Why not become an owner in these companies you're paying for and let them pay you dividends? They just raise their dividend as well, Waste Management. Amazing company. The next company I own is CVS, which is having a rough week. I think on the week they're down 3%, but I'm still up on the 6 shares I bought at $62.78, total return of 8%. From what I can see in the market, CVS is dominating the pharmaceutical business, and if they go down further, I'd be tempted to buy a little bit more. They haven't raised their dividend in a little while, but they've done some major acquisitions, and I think once they start paying off debt, they will start rewarding their shareholders more. So for the short to near term, I am happy with owning CVS. The next stock I own is my only sin stock, which is also on decline, and that is Altria. I own 10 shares at $45.96. They are unqualified dividend king. They're a sin stock. They sell things like tobacco products and things like that. You know, part of the reason I want to own them because I do think legalized MJ is coming, and I believe they'll be a big player in it, and also a conservative way to get access to that market. The MJ market is having a really tough time right now, and until then, I'll scoop up some pretty awesome dividends. Don't trust Robinhood's dividend yield. They're saying 6.57%, but it's somewhere in that neighborhood. And if they keep on declining, maybe I will add a little bit more. All right, the next stock, I only have 2 shares into it. I bought a little bit before they announced the Disney Plus service, and I should have bought more the other day. The stock has been on decline. That is Disney. I own 2 shares at $132.92. Very small position in the portfolio. Love to grow it in the future. Maybe it'll go back down. It was like $135 the other day, and I was eyeing it. But when the whole market goes down, there becomes so much opportunity. You really have to pick and choose where you want to deploy capital. So I was tempted to pick Disney that day, but I didn't. But I will in the future. All right, the next stock I own is Verizon. This is my play into 5G. 5G is going to revolutionize the speed of the internet, and I've always viewed Verizon as a high quality company, and I expect them to have a premier 5G service. I currently own 12 shares of them at $59.42. I am pretty much at a break even. They also pay a pretty sweet dividend of near 4%. It's my telecom 5G play for now. The next stock I own, it's such a small position, I'll cover it. It's called Komodo. It's kind of a sympathy play on Tesla. They make some pretty awesome electric vehicles, not like cars or anything, but they have a product coming out with these, like a super built up golf cart for like in-city driving and for like municipalities to move around, and they're super awesome. They haven't even launched their product yet. I only have $45 into it. I will beef this up a little bit more, but it's a penny stock, and penny stocks are kind of annoying. The 52-week high of the stock is $7, so this thing could fly. Maybe I throw a few $100 into it, see if it can go 3-4x when they actually start selling their product. But like I said, it's a sympathy play on Tesla. I want to do more research into them to feel more confident to put money into them. But I know they have this really cool product coming out sometime this year, so something to keep in mind. Komodo. The next stock I own is actually a Reit, and that is LTC Properties. I live in South Florida. We have a lot of nursing homes, and we have a very aging population in the United States. They focus into long-term care, which we're gonna need a lot of. So a Reit is a monthly paying dividend company, which is pretty awesome. And I scooped up 15 shares at $45.77. I'm near a break even right now, but I scoop up those dividends every single month, which is pretty awesome. The next company I own is actually an ETF. I'm a big fan of ARK. It's a hedge fund ran by Catherine Woods, which is very bullish on Tesla. It's kind of how I found out about them, but it's their ARK Genomic Revolution Fund. And this is pretty awesome. I've been recently putting more and more money into this. I want to create this position to be a decent size. It's an ETF that focuses into investing into companies that are working on gene sequencing. Companies like CRISPR and Editas that are literally going to revolutionize healthcare. And there's already been revolutions into things like sickle cell anemia. They're finding that gene sequencing is able to cure diseases. Humans, our bodies are really made up of code, and our code is our DNA. And when our DNA is incorrect, we're giving ourselves medicine to help mask with these things. But if we can get in and fix the genes within humans, that is going to revolutionize healthcare, and I am so excited for the opportunity for that to happen just for our species' health. But there's also real breakthroughs going in, and these companies like CRISPR and Editas are having a hard time even breaking a $5 billion market cap. I see this as hundreds of billions of dollars in the future, so something we're looking into deeper. As this investment gets bigger, I'll probably make more videos just about investing into gene sequencing companies like CRISPR and Editas. But right now, as I'm still learning it, I feel more secure just buying an ETF that could deploy the capital a little bit better than I can, because I trust Catherine Woods' allocation better than my own right now. But until that happens, I won't buy individual stocks in that market, but it's the only ETF I currently own in the Robinhood portfolio. The next company, I was really inspired by my boy JMac with JMac Investing, and that is Five Below. I'm very bullish on Five Below for a couple reasons. One, because when I go in the store, I feel like they just get it. Sometimes when I walk into like a dollar store or a Dollar Tree, I just feel like I'm in this kind of older world. I just feel like it's not in tune with my generation. When I walk into Five Below, there's so many just helpful things that I need that are so well priced. I see Five Below reaching the market cap of a Dollar Tree or Dollar General, and that's about $25 billion. The company currently has a market cap of about $6 billion, so I think we have a long way to grow. I currently own 6 shares at $108.31, and I have a total return so far of 4.53%. They don't pay a dividend, but I see them growing a lot. And by me saying, like, I just feel like they get it, that's a very qualitative way to look at the investment when you go in there and just understand that this company is offering things like cheap iPhone chargers, cheap sunglasses, inexpensive toys for your kids, even like the candy section. I just so believe in the business model and being so well priced, and the items are just so convenient that we need. So I'm very bullish on Five Below moving forward. The next stock I own is one of the more popular REITs, and that is Realty Income. It took a dip last month, so I picked up 6 shares at $73.08, bringing my total equity to $470. I'm already up 7.29% in that 1 month. And again, it's a REIT, so they pay me that sweet monthly dividend, which I'm trying to grow the dividends in this account. I'm getting about $40 a month so far, and I'm excited to see that number grow. The next few stocks you'll see down here are some of my more current plays that I'm trying to find deep value. So I've been buying Komodo, which Komodo, they're an industrial company. They make things like Teflon, they make things like Freon, and a bunch of other industrial products that we use for our day-to-day life. And the stock has gotten absolutely beaten up. They were a spin-off of DuPont, and they've gotten stuck with a lot of the liability of that. And the stock is down from $41 all the way down to $13.92. It has a great dividend yield of currently 6%, which is insane. So I scooped up 40 shares at $17.02. It's gone down since then, but I don't really worry about these things. I really feel like the stock will eventually rebound. I think the company is just oversold right now. I think the PE ratio reflects that. So I'm down 18%. It's probably my biggest loser right now, but that's why you diversify. The next stock I've been buying is Carnival Cruise Lines. Ever been on a Carnival cruise line? If you haven't, you probably haven't really partied yet. The stock is having a tough time right now with the coronavirus. I think there was a report the other day, someone got quarantined on a cruise ship, which is gonna make people not wanna travel. But I started buying the stock a little bit too early, but I will be adding more at these lower prices. I currently have 12 shares at the dollar cost average of $48.29. I'm down 10%. They have a sweet dividend of over 4%, a PE ratio of only 10, and a pretty rock solid balance sheet in my opinion. You know, when you buy expensive things like cruise ships, you're of course gonna have some debt, but also having so many cruise ships, I think they bought like 38 new cruise ships. It creates what's called a moat, a high barrier to entry. I know I said a moat for a boat company, but it creates a very high barrier of entry for competitors to come in and steal your market share. Who wants to come in spending hundreds of billions of dollars to try to compete? So for those reasons, I am bullish on Carnival Cruise Lines. The next stock I own is Square Payment Services. I have a business where I use Square all the time. It's such a convenient product, and it's my payment services play in the portfolio so far. Company's ran by Jack Dorsey, who I think is a great person to have in the space. To me, he kind of gets it. He's also a cryptocurrency investor. So I find that so unique. Someone in payment services is investing in a cryptocurrency as well. I picked up 8 shares at $67.81, and I'm up 10% on those shares so far. I see mobile payment services only growing, and Square has already created a great brand along with it. And again, I'm a big fan of Jack Dorsey, so I really enjoy investing in his ventures. All right, the next stock I own is Pepsico. So I felt like the portfolio was really lacking in food and beverage, and I really thought Pepsi was at a fair valuation when I picked up 6 shares at $137.33. This is a new purchase for me, and I'm up 3.3% on it so far. Rock solid company. Really, when I compared the company to Coke, I was looking to buy one of the two. The PE ratio really stood out. Great dividend company. You guys know the brand. They're also diversified not only into like sodas and Tropicana, but they also have salty snacks like Doritos and other food related items. So I just think a rock solid company that I could hold for the rest of my life. All right, so the next company is my one utility, and that is PPL. I've been looking around for utility. I love Southern Company. I used to own them, but I sold them before I did a real estate acquisition. And I felt like PPL was a nice high yielding dividend utility at a fair valuation. I picked up 17 shares at $35.54, already returning me 1.84%. I just bought the stock like 3 weeks ago. Look at that yield, 5.79%. That's pretty sweet. So now we'll go down, check out the cryptocurrencies, which is actually a pretty big play for me right now. And I'm gonna make more videos about cryptocurrencies. So if you want a more in-depth analysis, again, just make sure you subscribe to the channel. Some people hate cryptocurrency and might not like me for investing into it, but I like making money. So Bitcoin Cash, I actually sold some of my Bitcoin Cash because I'm upset with some of the things that leadership in the project is doing. And I don't want to get too into detail, but they're changing from a voluntary system to a block reward system, which I don't think is a good call, but I'm up 74% on my Bitcoin Cash. I sold quite a bit not too long ago, but my dollar cost average is $220, and we are at $384 today, so it's brought me a great return of 74%. And actually my current position is still 10%, so it's actually a pretty big piece of the puzzle. I am a big fan of Roger Ver. I thought he was great, but I think the project is making some not so wise moves, and we'll talk about that more later. So I took a lot of that money that I sold in my Bitcoin Cash and I put more into Ethereum, which I'm up to 29 Ethereum right now, which is pretty cool. If I get to 32, I can actually start staking this money and making passive income off my Ethereum. So I'm up to $5,320 into Ethereum. Ethereum has the best developers building on the blockchain, and I really think in the next bull run we'll see a lot of meaningful things coming from the project. You know, leadership is very important to me. I'm a big fan of Vitalik Buterin, and he's very engaged in improving the project and just one of the most talented guys in the crypto space. And both of these coins are in the top 5 of market cap. I believe they will actually outperform Bitcoin this year. I think Bitcoin had such an amazing year last year. A lot of people were going towards it because it was like a safe haven investment when compared to the rest of the market, because the market was still in a bear market. I say this with caution. I don't think the market will make a newer low. I think the bottom is in, which I think we're going to start slowly creeping back into a bull market over the next year or so. And I think the Bitcoin maximalism will die down and you'll see a higher growth rate into altcoins. And I feel like for me, getting access to the coins in the top 5 is a good way to go about it. So with that said, guys, that is my Robinhood portfolio update. Like I said, I'm super happy with the returns. In 6 months, this has returned $9,385, and it just reminds me of a quote that goes, if you don't learn how to make money in your sleep, you're gonna end up working until you die. So for me, this is just appreciation in the portfolio by investing into great companies. And for me, it's pretty passive. Yeah, I do my homework into it, but I really enjoy it. And then I get to come on here on YouTube and talk about it and share my experience. And guys, I appreciate you so much for watching. Like, it's amazing. It's such a fun journey to do this. It helps me become a better investor. So let me know what you think down in the comment section below. What do you think about the portfolio? Knock on wood. Hopefully I can sustain anywhere near these types of gains. But as I'm starting to hit these little doubles and triples in things like Tesla and cryptocurrency, I am moving them into more dividend, safe play stocks. So I expect the returns to damper, but hopefully I find other great opportunities to find in the market where I can go aggressively at those stocks and get the appreciation of it. So I know this has probably been kind of a long video because the portfolio is getting bigger. So I'm gonna let you guys go for now. Before you leave, make sure you hit that thumbs up button. As always, guys, I'll see you in my next one.